How are we doing, Bullas? Welcome back to another Shroomy Tea video. And again, I brought this chart up a few weeks ago, and it is simply the stablecoin dominance in crypto. And when this goes up, it's bearish for crypto. When it comes down, it's bullish for crypto. Like we seen in March in 2024, we got USDT, which is Tether dominance, all the way down to about 3.8%, and there was a bit of euphoria in the market following the stablecoin dominance back in around September of 2023, coming down about 55% into that low in March. And during that euphoria phase, that meant half of the stablecoins that were on the sideline got pumped into the market, and it was bullish, whereas we then got from the March 2024 low, which was euphoria. We then bounced all the way up in here, about 70%, which means 70% of the people with stablecoins in the market, they ended up selling their crypto, their bitcoins, their ethereums, their altcoins that were performing during this leg down, and they took profit basically and sat on the sideline and caused the market to again go back into its shell, and we came into a massive area. And this was the time with Japan market problems. Again, from there, we got a nice rally down from August 2024 down to the end of December. Another 42% move down in stablecoin dominance, and that was the run up to Donald Trump coming into office, which XRP in that time done 500%. Again, both these times were the most euphoria in the last cycle for altcoins, and that was March 2024 and Q4 of 2024. Again, between Donald Trump coming in at this level, this 3.8 level, stablecoin dominance then pumped back up to March, 70%, and again, that was when we had the tariffs back then. Before we got one final little run before, back in October, we had this 19.6 billion liquidations, and that's when Binance did 10-10. Binance, everyone got liquidated if they were in longs, shorts, whatever, and we broke this massive trend line from September, which in here, in my opinion, signaled the start of the bear market. We then had this massive bull flag, and then stablecoins ripped at the start of February all the way up to 9%, which was last seen in the bear market in 2022, in June of 2022 and November of 2022. During that 1 year of bear market we usually get for Bitcoin, we've seen stablecoin dominance at its 4-year high, which I am expecting later this year. I don't know if it'll be this high, but we'll definitely sweep these highs in my opinion, which would be up here about 9.4%. I think we'll get up here and sweep the previous 4-year highs. And right now we've got this massive flag pull up, this flag channel, and we're waiting for the breakout in here. And this is extremely bearish for crypto. As I said, when the stablecoin dominance comes down, it means that is bullish for crypto. And when it goes up, it means it's risk off, it's bad for crypto. And right now, it looks like it wants to go up to the upside. And that is very, very, very bad for crypto. And that's just one of the readings I'm making at the minute, is this massive bull flag in play. And yeah, I mean, if we take, for example, the previous bull flag, so this is kind of what we've got yet again. Something like this to play out and sweep these highs from the last year 4-year high back in July of 2022. So right now, this flagpole on the USDT dominance is extremely bearish for crypto. We've also got Bitcoin in a bearish flag pattern, so the opposite of this bull flag. So this bull flag means stablecoin dominance is bullish, and that is bad for crypto. You've then got Bitcoin in this bear flag, which means Bitcoin's going to go down, and it looks so similar to the 18 high to the bear market in 2019, the 2021 high to the bear market in 2022. It looks like we're in the exact same position, just halfway through the cycle, halfway through the 1 year of a bear market. And right now, this bearish flag pattern, after we've filled the CME gap at 81k, things aren't looking good. We've got Ethereum starting to come home here, and this kind of rising wedge bear flag pattern that we can see on the screen starting to come, and I really do expect Ethereum to make another 25% leg lower to 1.5 thousand minimum. If not, I do actually think we can get to 1,000 or just below 1,000 on Ethereum by the end of the year. And yeah, things aren't looking good for the crypto market. We can also see the 2017 bear market, the 2018 bear market, 2022 bear market, and the 2026 bear market so far. This isn't the bull market support band, because that is the 1 week 50 EMA and SMA, which we are certainly below, so it does confirm we're still in a bear market. But also, we've got the 200 daily moving average on the screen, and you can see back in the 2017 cycle, from the high to the 18 bear market, when we get into the bear market, we rejected off in April of 2018, so that would be April of 2026. You can see July of 2018, we rejected the 200 moving average. Again, last bear market in 2022, we rejected in April of 2022 as well. And it's only when we get back above it in January 2023 the bear market is over. Again, we rejected from it back at the start of May here. You can see the similarities in the last two bear markets. We can see it, a rejection in here, a rejection in here. Again, you come to the last bear market, you can see rejection in here. And so far this cycle, we're starting to see a rejection forming here, which again, we just seem to be respecting the 200-day moving average, which is causing another rejection, a hard rejection, similar to the last cycles. So back in 2018 bear market, we see it touch twice. Last cycle, we've seen it touch once. So is this cycle, are we going to see it touch twice again? Are we kind of repeating more of the 2017 bear market? So again, and then we've got the total crypto market cap, again, lost that massive 9-year support back at the start of February in here. And since we lost that support, we're now in a massive bear flag, which on the daily time frame we can see is more defined. You can see the rejections off the high of the bear flag in March, in April, and in May now. It's been going on for quite a while, this bear flag. And when we get the impulse down, it happens quite drastically. So when it happens, I'd expect it to happen quite drastically. And as we can see in the bull market, we see this bull flag, we break up, we get a falling wedge, we break up, we bull flag, we break up. But in the bear flag, in the bear market, we come down, we get a bearish rising wedge, we break down, we get a bear flag, and we're just waiting for this capitulation down. So again, bull market, bullish chart patterns, and we break up. Bear market, bearish chart patterns, we break down. And that is what I'm expecting here. At least one leg lower on the total crypto market cap, which is going to hurt a lot of people, because a lot of people think the bear market is over for some reason. And the market makers have done a great job at convincing people we're so back, because Bitcoin is up over 35% from the lows it made at the start of February. And we've now been trending up for 3 months. But as I always say on this channel, a bear market's roughly 1 year, and within that 1 year we can't just go down in a straight line. So what do market makers do? They bring in time capitulation, which is the price is grinding up in a choppy pattern. So with impulse down, would then grind up for a few months before the next leg down, before grinding up for the next few months before the next impulse down. And this just psychology of getting people thinking we're back to then wreck them again, to thinking we're back to wrecking them again. That is what gets people broken in this market and makes them never want to return. And that is what I believe this in here is, just a bullish grind up within a bear market. Again, very similar to this in here, this kind of rising wedge in here, but just a lot longer. Whereas again, in a bull market, what do the market makers make us think? We go up, they then make us come down for this period in here from March to November. So a very long time, nearly a full year of just chopping down before we get that massive impulse up. And they just get people who buy the top in here wrecked by making them come down, selling down here before the next leg. And it's the exact opposite just in the bear market.